And good morning, everyone. You're with Tina Nixon, standing in for Michael Laws, who's off doing some council stuff. And as a result of that, I've inherited one of my favourite guests of Michael, one of his regulars, Craig Stobo. Good morning, Craig.
Hello, how are you? Tina, lovely to talk to you. How can I? What do you want to talk about today?
Well, I suppose we've got to start with the OCR, haven't we?
Okay. Let's just quickly go through that because it's sort of like yesterday's news. But my take on it, obviously, the cash rates dropped at the RBNZ from 4.25 to 3.75. No particular surprises there. They think they're in or near the middle of the band, and the economic outlook broadly means that they expect it to stay there in the medium term. So, despite some prospect of spikes in inflation, such as we're seeing in the UK and the US, they seem firmly committed to further reductions if the economic outlook unfolds as they expect. They did mention quite a lot around the revisions to growth last year by Stats Department, revisions upwards, which meant that we started last year much stronger than the RBNZ thought.
Yep.
But then we had that dreadful September shocker when growth went into a whole -1%. So despite those sort of technical issues, they're still expecting growth to pick up slightly in December quarter and broadly expand into the following year. So what does that mean for you, me and our listeners? Well, floating rate mortgages have come off a little bit, but fixed rate mortgages are finding it much harder to fall. And that's because the underlying interest rate structure, both here and overseas, is also much higher and not falling, basically because of the outlook for the US Treasuries, the supply of government bonds that the New Zealand government is having to issue. There's more of them, and the swaps market, which underpins the way banks interact with each other.
Can you explain that a wee bit more, just exactly what that is?
Yeah. So you've got kind of three key markets here. You've got the residential mortgage market,
Yep.
Which prices off the bank's cost of funding,
Yep.
and their appropriate reward for risk. You've got the government bond market as
Yep.
a separate market that is expanding in volume. So you'll appreciate that our debt to GDP ratio is heading towards 46%, and so the government continues to have to issue more.
Yep.
And I think this year is another $12 billion they have to issue on top of rolling over maturities.
Yeah.
And then there's a market called the swaps market that works between the banks and some corporates, where you exchange cash flows, floating rate cash flows,
Right.
for fixed rate cash flows. And that's a huge market domestically and internationally, and it basically fixes the pricing of a lot of the banks' cost of funds and therefore lending. So broadly speaking, short-term rates are coming down slowly with the OCR, but fixed rates, 1 year out to 5 years, for example, are struggling to fall much further. So that's kind of the dynamic we're in. So that's kind of the RBNZ summary. What does this mean from here? Well, possibly more, maybe 2 or 3 smaller cuts of 25 basis points through the course of this year. But I think that all depends on tariffs, global growth, which is struggling. The exchange rate has fallen, which will bring in more tradable inflation, but is good for our exports.
Yep.
And whether other parts of our economy, in addition to the primary sector, construction, retail, hospo, government expenditure, etc., can recover, and they're finding it quite difficult. So there's some caveats in there, but broadly speaking, they seem to be happy that at the moment, the headline inflation number, which is 2.2% in December, is at or near the middle of the 1 to 3% band. So that's the outlook.
Yeah. So it's sort of like steady as she goes, really, sort of.
Yeah, and then you say, well, what happens to activity given that interest rate profile? Most commercial activity, would be looking at trying to lock in, or some commercial activity will be trying to lock in fixed rate funding, commercial funding, and of course, if they haven't come down very much, it makes it difficult. The bank's ratios, leverage ratios and income ratios for banks also make it a bit difficult for banks to lend to investors in the residential housing market. And it's quite noticeable that the house prices in January came back a little bit more around the country, and you're seeing quite a low rate of clearance in auctions.
Right.
And that tells you people aren't turning at that price.
Yep.
And so the real estate industry is moving to set date of sale or tender documentation to try and get buyers to at least put a number in, because the auctions aren't working.
You see a lot more actual prices up front, which I think is quite interesting.
Yeah.
Craig, there was a. I'm just going to refer to something here because I thought this was really interesting. Sure. It's from Federated Farmers, and I think the guts of it is that they're concerned that, and hopefully I get this right, is they have big asset backing, but when it comes to the banks, they end up having to pay more for loans and stuff, and yet a 21-year-old can go and get a house mortgage with no assets at a much lower borrowing rate. And I think that was a really interesting point. So are farmers being unfairly treated here?
Well, a couple of points by way of background. So you'll realise there's a banking inquiry.
That's right. At the moment. This has come out of the back of that.
Correct. So that'll wind its way through, and various people are participating in the select committee process. I think the other point to make is that banks have to work to RBNZ capital ratios, right? So you have to hold you have to hold, roughly speaking, 18% capital ratios, which is the amount of capital you've got to make sure your balance sheet is supported in the event of a tough economic or financial period of time. But the risk weightings, so the way banks work is they have risk weightings for different asset classes. So a residential mortgage on a residential house has a lower capital requirement than a commercial business, whether it's a farm or a manufacturing plant or a commercial building. So they have different settings, and those settings matter because they drive the amount of capital required to be allocated against those mortgages.
I get that.
And residential mortgages just require less capital. That's the issue.
Mm-hmm. And so there has to be changes to the settings if farmers are going to get any relief?
Well, I think the inquiry will throw that same thing up. So it's really a question for the RBNZ,
right.
Adrian Orr as governor and the board to consider those settings, and they're thinking about black hat scenarios where there's a crisis and banks here have to stand up to support liquidity in the event that depositors say, I want to take my money out. You've got to have capital to support liquidity, and they've made it very clear that the banks here have to stand on their own 2 feet. They can't be supported or expect support from the Australian parent because it may not happen. So we have pretty high capital ratios in New Zealand as a result. And that's one of the drivers for commercial lending, including lending to farmers.
Cool. Hey, look, we've actually got a text question, and please, listeners, if you do have any questions of Craig, fire them through on 5050 if you have got a question. Can you ask Craig what he would expect banks to reduce fixed-term mortgages rates by?
Well, I don't think they've moved very much at all.
Yeah.
In fact, long-term bond yields have been moving around quite a bit with the changes in prospects in the US. So it looks like the US Federal Reserve is on hold. Inflation's actually ticked up there, and it has done so in the UK as well. In addition, there's a huge amount of debt being issued by the US Treasury to fund all the deficits. So you got, like New Zealand, you've got a large supply of bonds, and that's impacting on long-term yields and also, in a related sense, the swap market. So it's very difficult for me to see those longer-term rates come down as much as short-term rates have. I don't give advice, right? So I'm not a financial advisor.
Yep.
I'm just painting the picture.
Yep.
But in normal circumstances, the trajectory of interest rates through time should have a positively shaped curve. So short-term interest rates normally are lower than longer-term rates, and that's because the longer you lend money out to a borrower, you need to get a reward for what we call term risk, so that risk over time. In a floating rate sense, I get my money back in prospectively. If it's a 90-day loan, it's not often 90. I get my 90-day money back in 90 days. If I lend to you for 5 years, I have to charge a premium for that time period. So normally, interest rate curves are positively shaped. So we're kind of back into a normal environment, low short-term, higher long-term.
Yep.
And prospectively, those longer-term rates are going to take a lot longer time to come down, if at all.
Someone's asked about wind farms. Are you happy to take a question on that?
Yes. What's the question?
I'm not too sure. This might be a loaded one, actually. Can you ask Craig about his wind farm? I see my shares have jumped in price. Does he want me to sell? Someone's taking the piss, I think.
No, that's great. That's great. So, by way of disclosure, I'm chairman of New Zealand Wind Farms, and we announced yesterday that Meridian Energy, who's listed on the New Zealand Stock Exchange, also has approached us, and directors of New Zealand Wind Farms have agreed to ask shareholders, the court, and an independent advisor to accept a scheme of arrangement. And that has to go through those processes of a court approval and independent advice to enable Meridian to conclude their offer of 25 cents per share for each share held by New Zealand Wind Farm shareholders. The price the day before, so what are we now for Thursday? So the price on Tuesday night was 12.1 cents.
Whoa!
And the offer is at 25. So
yeah, that's pretty good.
Delivered on that price change. I think it's 107% premium to the price on Tuesday, and over a longer period of time, roughly 97%. So shareholders have the chance to vote for that and say, yes, I want to sell my shares to Meridian, and that'll probably be in about May. But we've got a few hurdles to go through that. So what directors are doing are recommending that our shareholders accept that offer, which we regard as fair. But of course, the independent advisor that we've yet to announce will need to opine as to whether it's fair. So, yeah, that's the background. Thanks for the question.